What is an Islamic mortgage? An Islamic or halal mortgage is better compared to a conventional mortgage because there is no interest rate. That is why even non-Muslims are interested in the system. However, before you can apply for the Islamic mortgage here, we have a little insight that will help you understand what it actually is and how it's different from a conventional mortgage. The mechanism of Sharia-compliant halal mortgage. A home loan made by the Sharia or Islamic law which precludes the installment or receipt of intrigue. An Islamic home loan might be an intrigue-free credit, however frequently it is a more unpredictable exchange. For instance, a bank could purchase a house for money and after that repitch it to the borrower for a benefit through amortized installments to such an extent that the benefit is the equivalent as the bank would have made had it expanded a general credit. Different compositions include the bank turning into a cooperative with the borrower, so both co-possess the house or business, a situation in which the borrower bit by bit purchases a lot of proprietorship with a progression of installments. How does Murabaha work for Islamic mortgage? Murabaha is a type of halal mortgage offer where the expense of the products to be sold and also the benefit on the deal is known to the two gatherings. The buy and offering cost and the net revenue must be unmistakably expressed at the season of the deal assertion. Installment of the Murabaha cost might be in a spot, in portions, or single amounts after a specific time frame. How does Ejar work for Islamic mortgage? If you are planning to get the Muslim mortgage, Ejar is a more reliable option. Here are some of the rules and regulations you need to consider. Step 1. You discover a house to buy and get a real cost with the lender. Step 2. Likewise, with any home loan, you at that point concur the measure of the home loan with your Islamic moneylender. Your bank will then buy the property inside and out. Step 3. You at that point go into two concurrences with the loan specialist. First, you will pay back the price tag of the property in settled, regularly scheduled payments, more often than not more than 25 years, like an intriguing contract. Second, you will pay a concurred measure of lease every month. This gives the loan specialist's benefit. Step 4. The lease is set every year, and abatements every year by your slow payment at the price tag of the property. And Step 5. At the point when the price tag has been completely reimbursed to the loan specialist, responsibility for the property is completely exchanged from the moneylender to you. Rules for Islamic mortgage. Islamic mortgage has common rules and regulations, with conventional saving money. However, they are organized to be Sharia-compliant. Interest payment is prohibited. All types of intrigue are riba and henceforth are restricted. Islamic guidelines on exchanges have been made to anticipate utilization of intrigue. For instance, with a conventional home loan item, charge premium would be paid once again from the borrower to the bank. On the other hand, Sharia home loan ordinarily has two models to help you in obtaining a property. The Murabaha model. The bank will purchase the property you need and quickly offer it on to you for a benefit. The name can be inexactly meant benefit. You pay settled month-to-month payments on the higher cost without paying any enthusiasm back to the bank. For example, if the bank purchases a property worth $300,000, at that point it might pitch it to you for $350,000, and you should pay the whole in a settled period. Wakala model. You make a concurrence with the bank that they will fill in as your specialist. By doing this, the bank can utilize their cash to put resources into Sharia agreeable exchanging exercises to create an objective benefit for them. Why Islamic banks charge more if compared to conventional banks? In Sharia-based home financing, the home purchaser does not pay riba or enthusiasm to the fund organization, as he or she does when financing with an ordinary home credit. In this manner, in case of a default, Sharia-consistent home financing assertions shield the purchaser from paying intensified intrigue that outcomes in a cost more noteworthy than the first deal cost of the house. Islamic loan suppliers expect to keep the whole home financing process Sharia consistent, and along these lines won't compound late installment charges like regular home credit suppliers. Rather, they charge a settled expense that covers the late installment charge cost and does not fill in as a methods for benefit. Also, ordinary home credit suppliers regularly charge a pre-installment punishment to purchasers who need to pay in the front of the concurred courses of events, while Islamic fund suppliers don't. We may conclude that these are some of the common ways Islamic mortgages differ from conventional mortgages. However, you should know that according to the rules of Islamic financial system, if you will apply for a loan for your business, you will get all the resources you need for starting your business and not just money. And all the operations are run under the direct supervision of a recognized Sharia scholar.